Are you feeling the pinch? Many Australian homeowners are, as they navigate rising costs, while the Reserve Bank of Australia, RBA, seems to be playing it safe with interest rates. The latest economic forecasts paint a potentially bleak picture for the next 18 months, suggesting that higher inflation is likely here to stay, potentially ruling out any significant interest rate relief. On Melbourne Cup Day, the RBA's Monetary Policy Board, led by Governor Michele Bullock, decided to hold the cash rate target steady at 3.6%. Honestly, this wasn't a shock to anyone. After all, inflation figures for the September quarter came in hotter than expected, effectively resetting expectations for the foreseeable future, all the way through 2026. This news immediately shifted the focus to the burning question: what does this mean for everyday Australians already struggling with mortgage repayments? At the post-meeting press conference, Governor Bullock addressed this very concern. But here's where it gets controversial. Instead of providing concrete answers, or a clear path forward, she resorted to a well-worn sports cliché, stating that the board was taking it meeting by meeting. While this approach offers flexibility, it hardly provides reassurance to families grappling with financial uncertainty. Many critics argue that such vague statements lack the transparency and decisiveness expected from a central bank in times of economic stress. Is this a responsible approach when people's livelihoods are on the line, or does it simply kick the can down the road? For homeowners, the prudent approach is to brace for the possibility of no further interest rate cuts, and even a slight chance of a rate increase. And this is the part most people miss. The RBA now projects that inflation won't fall back within its preferred 2 to 3% target range until 2027. That means consumer prices will have remained stubbornly above 3% for almost 5 years. That's a long time to feel the squeeze. Specifically, the RBA anticipates inflation accelerating to 3.7% by mid-next year, before gradually declining, finally dipping below 3% in early 2027. This persistent inflation makes it incredibly challenging for wages to keep pace with rising prices, translating to another year of households struggling to afford everyday necessities. Imagine trying to stretch your budget even further when everything from groceries to gasoline keeps getting more expensive. That's the reality for many Australians right now. The Albanese government might also need to temper its economic pronouncements. The prolonged period of high inflation raises the possibility that the government will extend power price relief measures beyond the current year. While this would undoubtedly help households, it could also further complicate efforts to bring inflation under control. It's a delicate balancing act between providing immediate relief and ensuring long-term economic stability. Interestingly, even a moderate level of economic growth might be considered too high in an economy grappling with stagnant productivity. It highlights the fundamental need to improve efficiency and innovation to drive sustainable growth without exacerbating inflationary pressures. There's a silver lining, however. The RBA forecasts that unemployment will remain relatively stable at around 4.4%. Governor Bullock has emphasized the board's unwavering commitment to achieving the 2.5% inflation target, stating unequivocally that just below 3% is not good enough. This commitment suggests a willingness to take further action, if necessary, to bring inflation under control. The RBA's latest forecasts incorporate market expectations of one more rate cut in 2026. However, Governor Bullock cautioned against placing too much emphasis on this prediction. It's really an interesting question about whether there's many more rate cuts left to come, she remarked. This statement marks a significant shift from earlier in the year, when she hinted at the possibility of multiple rate cuts. And the million-dollar question: could the next move be an increase in rates? Anything's possible, she stated matter-of-factly. This statement, while seemingly straightforward, underscores the uncertainty surrounding the economic outlook and the RBA's future policy decisions. What do you think? Is the RBA doing enough to combat inflation and support homeowners? Are you prepared for potentially higher interest rates? Share your thoughts and concerns in the comments below.